All right, so this is a recorded This Week in Crypto this week. Our normal streamer is not here today, but I will do my best to give a recap to what we saw over the past week, as well as give an indication as to what we expect to see next for the remainder of this year in particular. I think it'll be a bit of a rocky ride, and this past week has kind of started to show evidence that bulls and bears are really pushing and pulling in both directions right now. And, even though Bitcoin is actually up a bit, currently at about 101.15K at the time of this recording, it's kind of been a bit of a mixed bag with most altcoins actually dropping behind. So we'll take a look at a few different assets today. Chainlink has been in the news quite a bit, up 11.2% as one of the best performing assets of the notable large caps. Sui continues its great run of 2024. Pepe also up 11.2% with a great run in 2024 as well. Aave, huge gainer throughout the year, 30.1% again this week. BitGet token up about 34.5% as well. Mantle 8.5%, Ondo 14.4%. and virtual plus 35.8%, just cracking the top 60 market caps or so over the past week. So those are basically it as far as the notable gainers. The vast majority of crypto has dropped, and a lot of people are kind of calling it regression to the mean. Obviously, altcoins have had such a tremendous run over the past 2-ish months or so, since really October 11th, when the latest bull market really began. One may argue it went all the way back to October 2023, when we really first started to gain momentum and Bitcoin was surpassing 50K and 60K again. But it was kind of a weird mix of, October 2023 through March 2024. Here, it'll help if I have a visual of this. We'll just use this chart here for a moment, going back to, we'll say, mid-2023. So you can see right around, call it October right here, right after this red bar, that's when we really took off, had that eventual March all-time high above September 73K, excuse me. Then this big chopping range. So one could argue the bull market kind of ended here, and then all of a sudden we get the second week of October, about 4 weeks before the Trump elect ended up happening. That's when things started to just surge. And then, of course, the Trump pump candle right here just really gave clarity as to what crypto investors were hoping for and had been hoping for all along. And we eventually got above 100K after some teasing, went back below, and now we're back above again. But just to recap what we see on our screener here, the past week has been up and down. Bitcoin, even though it's up, is kind of shaky, and sentiment is looking a bit iffy for it as well. If we back up to 30 days, though, you still see humongous returns for assets like XRP. Cardano has actually fallen below 2x over the past 30 days, but it was well above 2x before. Stellar is still way up. Hedera and Virtual being, like I said, one of the biggest risers, up 632% in the past 30 days. Over the past week, the overall crypto market cap is sitting at about $4.1 trillion. And the market cap is actually, it looks like, after this dip here, it did recover, but it is down about 1.1%. And the volume, more notably, is down about 33.5%. So people are kind of freezing up a little bit, not sure whether to buy or sell. We saw such confidence in transacting throughout October and especially November after Trump was elected. And that confidence has kind of been substituted with hesitation and hesitance, because 100K is 100K and a lot of people were not expecting it. So many people are letting it ride, expecting 110 next. Other people are like, man, I don't know if it's ever going to, get higher than this. I might as well take profit now. There's also tax season, which of course ends at the end of the year. If you want to file your taxes in the US, the deadline is April 15th to report your 2024 taxes. So many people are trying to consolidate their capital gains a little bit, see how that's looking. And as a result, I think we're just seeing just indifference right now from a lot of traders who just don't quite know what action to take, combined with some whale hodling and potential profit taking. You can see overall the cumulative level of coins held by whales is actually still going up, which is great news. But miners actually began taking this huge profit in early December last week. So it's interesting. Miners are not really as correlative with the price. They've actually been kind of inverse to price over the past year, but this line definitely hasn't. When we see this line go up, especially parabolically, that's when prices follow. You see how right around the Trump election, that's when they really started to take off and the price followed suit. So I still would recommend following what the 10 plus BTC wallets are doing very closely. Moving on to a few social queries I wanted to point out. This is the level of interest in buying Bitcoin as reflected by the query buy or buying or bought mixed with Bitcoin or BTC. And then we have buy, buying, or bought for Ethereum and buy, buying, or bought for altcoins. When we put them all on the same axis, Bitcoin is dominant, but you can see how Bitcoin's level of interest in buying since November 11th has dropped. So this past 5-week stretch has been showing a gradual decline in buying Bitcoin when the price has gone up. So it to me, this indicates the crowd is expecting a drop and they're too fearful to buy right now. Meanwhile, as we just showed, the whales are confidently accumulating more and more even as prices rise. So that should be a pretty good sign that, if there is a drop, the timing of year makes sense a little bit. But if there is a drop between now and the end of the year for tax purposes or whatnot, I don't know if it'll be very big, knowing that the retail crowd is fearful of prices dropping and the whales are not. The whales are confidently adding more and more and more. So if we go back to this query, this should actually be encouraging to see the interest in Bitcoin buys going down over time. Let's take off shared axis so we can see things a little better. This is Ethereum. You see the big jump. This was when Ethereum was really taking off. I can switch to Ethereum's price here. So this red bar spike was right after Ethereum had this huge run, and they were actually outgaining Bitcoin for at least a week or so. And that caused a lot of people to get FOMO. And then, of course, right after the FOMO, we see a minor dip. And then Bitcoin has managed to prop it up a little more. It eventually got above 4K, is now sitting just below 3,900. So I think that this is interesting as well, mostly on the decline, just like the interest in buying Bitcoin. And then finally, altcoin interest. You can see how much people really tried to snipe this big dip in all of crypto right here. I'll go back to Bitcoin's price. On December 10th, we get back down to about 94K or so. And then people were buying altcoins very aggressively because altcoins are kind of like leveraged Bitcoin prices throughout the year and throughout most of history, really. So we do see a bounce after this altcoin buy interest, but even that has started to kind of normalize once again. So, my take from this is that the crowd is hesitant and reluctant to really swarm in to buy more Bitcoin after such a historic 2-month run that we saw, and arguably a 14th month bull market. Another one that's definitely worth pointing out, the CPI, consumer price index here in the U.S., came out with a report that that inflation was about on par with what economists were expecting, arguably just a tad above what they were expecting. So even though it was kind of reported as business as usual, the numbers actually said there was a tiny bit more inflation than was expected by economists. But regardless, any not bad news right now is considered good news in crypto. And so they just took that as, okay, CPI is more or less as expected. Let's pump up the price again. And, stock markets had a great day this day too. But at the same time, we still have to wait until next week for the rate cuts. And I've seen estimates at like 96 to 98% likely that the Fed is going to cut rates again, just like they did the last 2 months, by at least 25 BPS. Last month they did 25, and then 2 months ago they did 50 BPS, and those were the last 2 times they were able to. So right now, I think a lot of people are going to be treading water and waiting for the rate cuts to come in, as experts seem to indicate. If there is, for some reason, a surprise non-Fed rate cut, that would have an instant impact on retail traders who would sell off. I'd be very curious if they do sell off, whether the whales and sharks pounce on that and quickly scoop up even more coins, or whether they also get spooked by the lack of rate cuts. Regardless, it sounds very unlikely that we don't get rate cuts. And when we likely do, we'll see another similar rise. If prices are at 100K next Wednesday, it would be not surprising if we jump to a new all-time high of like 105, maybe even 110, but that might be a stretch just off a reaction to the Fed rate cut news. Regardless, this is a major story that no matter where you are in the world, pay close attention, because after such a major run these last 2 months in particular, we could see a lot of fireworks based around the Fed's decision. And it would also be right before the year ends too. So taxes, things like that, there's a lot factoring in. Okay, another thing I mentioned, and I talked about this with a guest caller that I recorded a video with earlier this week, but the mean dollar invested age is still a great indicator of whether or not we're still in a bull market. And as long as this curve is actually moving down here in pink, that's a sign that dormant coins are moving into circulation once again, getting out of stagnant wallets, particularly whale wallets, and back into play for retail traders to circulate around, to move around on exchanges. And that tends to be what perpetuates rallies. And you can see, going back to technically, the second week of October, that's when we kind of started to see a little bit of a drop. And during that time, if I highlight right here, look at what happened during the time that the mean dollar invested age was dropping. And then we go here to March 2024, it flattens out. And then what do you know? About a month and a half before Trump gets elected, we start to see mean dollar invested age drop again. And you had maybe a week or so to react. I'll zoom in really quick. So if you're reacting to like a daily drop in mean dollar invested age, this is where it started to drop. We see probably just a few huge whales making moves here, causing this big drop on the 7th. And then technically it was right around the 10th, 11th when the price rally began. So if you're looking for kind of a mid or long-term indicator that a bull market is either beginning or we're in the midst of one, especially if you're trying to question whether to profit take or not, as long as we continue to see this drop, it's a very good sign that we're still in a bull rally. I've refreshed to get all the way to the present day, and it looks like it's still dropping even now. You can see the major drops that were happening here on the 4th and 5th as we topped out around that 103K all-time high. And even now, with the chopping that's happened since, we're still moving down with the average Bitcoin sitting in its wallet for about 435 days. And just a little over 2 months ago, we were at 525 days. So that shows just how insane this stagnant wallet movement has been and how it's perpetuated this bull rally significantly. Okay, so we talked about the whales, looking a little bit at Bitcoin's on-chain metrics and social. Transaction volume, it's kind of calmed down a little bit, but you can still see, if we go back a year in time, it's just tremendous how much this has ascended, even compared to March. Some of the biggest days of like $64 billion, $51 billion in one day, these are just dwarfing the $39 and $42 billion days we saw right at that March all-time high. So very encouraging to see this level of utility for Bitcoin. And then in terms of circulation and daily active addresses, not quite as much, which is interesting. So the amount of money being transacted on a daily basis is surpassing March, but there are many less addresses doing that high increase in transaction volume, if that makes sense. So it's still good that we're increasing, but we saw more increases back in March compared to now. Circulation wise, yeah, there have been some big spikes. Circulation often indicates a direction indicator. So if I zoom in here, we'll just do the last 3-ish months or so. Yeah, you can see, right here is where we started to see that pivot point. This was when that big $1 million invested age drop happened. And then 3 days later, we take off. Let me make this a different color so it's a bit easier to see. And we'll take off daily active addresses. So you can see pretty clearly the hugest spike of about 318,000 unique coins being moved in one day. That happened on December 5th. Then there was a little bit of a bounce or dip buy effort, I should say, on December 9th. And that changed directions of the price. But typically you'll see these big spikes when there's kind of a mini drop or a mini surge, and then a bunch of coins get active as markets get polarized and buyers, want to buy from the sellers and sellers want to sell to the buyers. And you get all sorts of fireworks. So look for these circulation spikes as good indicators alongside the age consumed metric, which I'll put here. Make that area as well. So these age consumed spikes, you can see they're quite similar to circulation. Big spikes happen when direction indicators or direction of price is about to change. So look for these two, age consumed and circulation, as good short-term indicators as to when we might see a pivot in the markets. MVRV-wise, average returns of 30-day addresses is at about plus 3%, just a little above average. Not really an indication that we're in a risky spot on the short term. But in the long term, 365-day MVRV is still at about plus 35% for a metric that averages 0% over the course of its history. So that means if you'd be buying into the position right now, you'd be doing so at an increased risk, while the average long-term investor is already up 35% on their money. So more ideal times, if you want to get in at the perfect spot for Bitcoin, something like here where both the long and short-term MVRVs are in negative zones, that's a great time you'd want to buy based on the math alone. In terms of funding rate, also an important one right now. Looking at BitMEX for Bitcoin and Binance, they're about neutral. You can see right here how we really started to see just huge longs around the all-time high. One could argue that is likely what caused the all-time high, was this level of greed, funding rates needing to be liquidated to neutralize, and that caused prices to plummet much more than they otherwise would have from just a normal, hourly or daily fluctuation. So funding rates being that high was a warning sign, and now we're in neutral territory. You could even see a very, very slim short bar right here, which is interesting. Look for these short bars as a good sign that the crowd is getting really fearful and you can buy with increased confidence. But for now, it's pretty much flat. So we'll be looking to see the next time that it starts to get extreme in one direction. Whale transactions kind of have settled down. It's about the same as it was a month ago. We're getting about 3,000 to 3,200, maybe 3,800 $1 million or more transactions per day over the past few days. I'd expect that that stays the same until we get another extreme swing in one direction. We saw that volume is down, so that would contribute to lowered transactions all around, not just for whales, but retail traders as well. If we look at the amount of coins held by, let's just say, the two smallest tiers here, any wallets, that are 0.01 BTC or less, they've actually been rising. And this is a bit of a warning sign. Let's zoom this out to a year. Oops, sorry, I got to get this part to a year. And let's add price to this chart. Single click there, and then double click there. So when retail starts to get super excited and they're aggressively buying, that's a sign that we might be getting overheated. When they're taking a lot of profit or they don't trust Bitcoin, that's when Bitcoin tends to take off. So you can see 0.01 BTC wallets or less, they shrunk from October 11th, right when the rally started, what a coincidence, all the way until about November 24th. And during that time, the price of Bitcoin went up 56%, and these wallets dropped by about 1.4%, 1.5%, that is, excuse me. And then since November 24th, they have started to rise once again, almost 1% more than there was about 3 weeks ago. And yes, Bitcoin has still managed to rise, but it's been a lot more choppy ever since. We're rooting for this line to flatten out or continue to go down, because you can see the obvious correlation with, the tiny wallets going down and price going up, and vice versa. When they're moving up, prices tend to go down. We want the shrimp and the fish out there, if you will, to be very, to lack confidence, I should say, in the price of Bitcoin as a great signal of bullish momentum. You can also notice network realized profit loss, just tons and tons of profit taking going on. This is actually a good thing. We want to see plenty of profit taking as a sign that it can continue to add steam to a bull rally. It started to tail off a little bit the last few days because there's been less profits to have as prices have chopped and flattened out. But we last saw things like this right before that March top. So I'm a little conflicted when it comes to realized profits. If it's coming from retail traders, it's a good thing. If it's coming from whales and sharks, not so much. But as we saw, whales and sharks are still moving in the right direction, which is why I don't think they're contributing to this so much right now. And also supply and exchanges continually moving down, now at about 7.97% based on the addresses we track. And that's extremely lower than where we were back on Christmas of last year, when there were about 12.1% of Bitcoin on exchanges. So less Bitcoin on exchanges means less of a risk of a future sell-off. Generally good news. As far as social volume goes, understandably, Bitcoin has seen an increased amount of social volume with huge milestones over the past month or so, but the last big spike happened on December 4th. If I zoom in here and get the price a little more granular, you can see how that was right at the top, and then we ended up chopping ever since. So another very good directional pivot indicator. Just like circulation or age consumed, Look for these age-consumed spikes, not just for Bitcoin, but any asset, as a good indication that the crowd is about to swing prices the other direction. Total amount of holders is still kind of on the downswing, which is mostly comprised of those tiny, tiny addresses. So I consider this a good thing. At the time of this recording, we've got about 54.53 million total non-empty wallets on the Bitcoin network. I also wanted to mention, if I refresh this, Ethereum's network growth, super high right now. Obviously, it's been making some of its own headlines recently, going above 4K, currently just a little below 4K, but the amount of new wallets, we haven't seen this level of generation since April, about an 8-month high. I'm encouraged by that. If we open up Ethereum's overall on-chain and social metrics right now, which I can do here, it looks quite similar on the on-chain side. You know, big spikes in age consumed right around the top. Circulation spikes, one right at the top on the 6th and one again buying the dip on the 10th. So it's kind of just a smaller microcosm of what Bitcoin's doing. And then MVRV wise, it actually looks a little more dicey. On the short term, with about plus 8% on average for addresses that have been active in the past 30 days, 25.7% for addresses active in the past 365 days. And then funding rate, it also looks a little bit concerning on BitMEX. You can see how it was really, really high during the run up until the all-time high. We saw that correction just like we saw for Bitcoin. But unlike Bitcoin, we're starting to get a little bit of bias toward longs again. So I'm a little concerned about Ethereum and its ability to have price dominance over Bitcoin for long periods of time until the greed really settles down, because Bitcoin's at least was not significant consistently over the past month. Ethereum's has been. Whale transactions much higher than Bitcoin for what it's worth. From a apples to apples perspective, looking at Ethereum now versus 3 months ago, you know, Bitcoin's back to where it was 3 months ago. Ethereum is still significantly higher and has been higher since the Trump pump started. Also, take a look at the extra 1 million to 10 million. Whoops, if I could find it. There it is. Yeah, 1 million to 10 million coin wallet. We went from 5 to 6, so we saw one added there. So something got richer during that time. It was probably coming from the tier below, which is the 100K to 1 million coin tier. If we look overall at the number of wallets that are not empty, it's just continuing to go up. And it's always tricky to measure Ethereum when there's so much DeFi and staking going on the network, unlike Bitcoin. So you'll pretty much always see this going up, but during flatter times, that's kind of what you can interpret as trader fear and FUD. And when it's going up really high, that's when they're more confident in Ethereum. And right now, traders look pretty confident. So I'm a little bit hesitant on Ethereum, even with the high network growth right now that I showed in that graphic. There are a few causes for concern. And it does seem as though it's going to be heavily reliant on Bitcoin, especially going into next week's Fed rate cut decision. Chainlink is another one I wanted to take a quick glance at. It's been in the news for a few reasons. It's also had some mini decouplings. Its transaction volume really spiked on the 11th, and we saw similar circulation back on December 1st, and it's dropped since, but you can see the circulation spike here. And then, that's an age consumed spike, while circulation has been just higher, but not necessarily as high as it was on December 1st. MVRV, though, this is where I'm a little worried about Chainlink for the short term. The average wallet for Chainlink is up about 39.5% for any wallet that's been active in the past 30 days. That is a big, big danger zone where we call anything above about 15% for any altcoin a danger zone. So it's been climbing, yes, during this stretch, but the higher it goes, the more risk you would have in adding on to your position during this time. And then the 365-day wallets on average are up 83% on their investments. So clearly we are in a bit of an overheated zone for Chainlink. Doesn't mean that they're necessarily going to retrace, but it means there needs to be a cool-off period to justify these gains. And there needs to be people buying at the top and losing a little bit of money in order to even this out a little bit. Take a look at the funding rate as well. Let me zoom in. So it's not too bad. On BitMEX, you can see some minor longing. Binance, not much at all. So I'd actually say Ethereum looks a little scarier in this regard. It's good news that we're not seeing like overly greedy, margin and open interest positions coming in right now for Link. Whale transactions are up. If we go back 6 months to get some context, yeah, it's actually a pretty massive leap compared to where we were throughout earlier parts of the year. It really peaked when we were seeing about 90 Link whale transactions over $1 million in a single day. But it's come down a little bit. It's at about 44 now, which is still quite high, just not to the extreme that we saw during that big spike at the turn of the month. And then in terms of whales and sharks, to see what's going on there. So it's currently priced at about $28. I'd say shark wallets would begin at about 10K or above. I'll just merge them. Yeah, we'll just do it by percentage, 10K or above. So they got actually a pretty big leap here on December 6th, which is interesting. And then anything under 10K here, and we'll go back a little bit in time. Let's go back to 2020. Add price. Okay. So when 0 to 10,000 is going down, notice that prices tend to go up. Look at it this way, since they're inverted to each other. 10K or more. When they're climbing, good news for Chainlink. And it's been climbing since late November of 2023, really. And even through this choppiness, when we kind of had a summer of letdowns after that March all-time high, it really made up for it beginning in the first week of August, right after that August 4th and 5th crash throughout crypto. Chainlink has just ascended roughly 3xing since that crash. So it's pretty remarkable what this whale accumulation has contributed to. You can look over time too, like when they started dumping back in early February, the price, we'll even say late January. So from late January to late November during that dump, Chainlink's price dropped 63%. And right now they're still rising. So for those who are saying, oh, Chainlink can't really go too much up higher from here, they're running on fumes, just know the sharks and whales are still moving in the right direction. And historically, that's been a pretty good sign for the asset. And last but not least, just a quick look at some of the most active networks using the activity matrix model. We have Lido DAO as one that should be watched right now. Sushi also just had a huge run, so it's understandable why there's a lot of network activity. In general, we try to look for the ones that are seeing lots of increased activity without the price run-ups already happening. Because if you think about it, network activity can happen for two reasons. Maybe some whales and sharks are starting to accumulate, but nothing's happened to the price yet. Or retail is reacting to huge price pumps and they're trying to ride the wave up and thus creating a top and getting punished for it. But right now, the three that I'm seeing that are on the top 10 list that haven't already seen a run up are Biconomy, Band, and GMX. So if we just pulled up, let's say Band, which I have not seen in a while, but has often been associated with Chainlink with similar price fluctuations. Let's go to BAND. So transaction volume not doing anything special. We'll skip these. I want to see the same ones that the activity matrix is keeping an eye on. And we'll just go to the last 3 months. I think $1 million or more whale transactions is a bit high for Band, so I'm going to add on 100K or more since it's a smaller asset. There we go. So we'll just switch that to daily, and you do see that we had a huge, not a huge, but a sizable 100K plus whale transaction spike, the most we've seen in 3 months, and this actually occurred at a top. Not much of a top, but at least a top. And then if we look at whale accumulation, let's see if it looks similar to Chainlink really quick. So it's sitting at about $1.97. I'll say sharks will then begin at, yeah, about 10K or more still. Actually, I think we already have it, right? Yeah, 10K or more, and then less than 10K in blue. So yellow's looking pretty good. Yeah, the 10K or more line, I still like the look of it. This is a very centralized asset, it looks like, because 10K or more wallets collectively hold about 97.3% of the total supply. But yeah, they're moving slightly in the right direction. Let's get a little more zoomed out so we can see the direction of this line better. So yeah, it's interesting. So they've definitely not been moving in the right direction the same way Chainlink has over time, but there has at least been some encouraging signs starting about 3 months ago. Since September 11th, they have accumulated, yeah, about 0.11% more of the supply, which is quite a bit when they already have 97% of it. And the price has gone up about 70%. If we look at that in terms of coins, I'm just going to go to, Absolute here, click merge, include 10,000 or above, click all those tiers. And it's actually interesting that it's moving down here. Maybe someone who's a Band expert knows a bit about how they use their supply, but it's interesting because the percent of supply has been moving up, but the amount of coins held in total, okay, it is moving up. It's just really hard to see because of the skewed axis on the red line. But yeah, they've accumulated about 114,000 Band, which is, you know, a decent amount when the price is about a little under $2. So call it something like $225,000 or so they've accumulated for a pretty small cap asset. So I just wanted to check out Band because I haven't looked at it in a while, but it does appear to be quite active according to the activity matrix. If we went over to this spaceshipy looking view here with the red and blue squares, Band's red squares kind of just started in the past 24 hours with active addresses much higher than they've been in a while. Network growth, whale transactions, hasn't seen much of a spike in social dominance, interestingly, so the crowd doesn't care about it. But even inflow and outflow looks good, meaning a lot of Band is being moved off exchanges. Then mean dollar invested age is also looking pretty solid. Just going to check that out too. Yeah, it's a pretty minor one, but still, you can see what I mean. It's moving down since 2 months ago. which not all assets are. But as we saw with Bitcoin, a move down means coins on average are getting younger and stagnant. Wallets are kind of becoming active again, moving coins back into circulation, which can help propel prices. So I like Band as a potential riser between now and the end of the year if the caveat is Bitcoin stays afloat and doesn't fall below something like a psychological support level of 95K. So let's see how things go. But, overall, I still think things are pretty encouraging because of charts like this that continue to show 10 plus BTC wallets scooping up more and more coins from the small retail traders that are indicating doubt right now. Also not shown, that I'll just summarize really quickly, is the positive and negative sentiment of Bitcoin. All of the commentary on a daily basis is shown here in green for positive comments and red for negative comments. And then the ratio here in gold is showing that we're kind of on a downswing. People have gotten more and more negative since that big all-time high top on December 4th. So yeah, they're leaning a little more negative than usual compared to the past 3 months. And I like the look of that a lot. So more bullish indicators to me than bearish. Don't be surprised if we see another choppy week where altcoins tend to struggle, considering how much they have really blossomed in the past 2 months. So this past week was not a huge surprise there, but as long as Bitcoin stays in this range, call it anywhere between 95 to 105K, pick out the altcoins that you see getting the best, most encouraging bullish divergences and rising network activity, and you'll likely do pretty well for yourself. Let me know in the comments anything you need clarifying, and thanks so much for watching till the end, those of you who are still here. Talk to you all soon. Have a great weekend.